Now it's time to apply all these things with a particular question. This is the question of SBR December 2018. You people already have that particular document. You people already have that particular document. I have already given you the document accordingly. I strongly suggest you have to read that particular question once. You have to read that particular question once. Please read this question one. You have 2 minutes. Okay, now, what is that particular requirement of a question? Now read the requirement. Okay, come on. Discuss how Hallam property should have been accounted for and explain the implications of the financial statement and the debt covenant of the Ficuston. This 7 marks includes 3 components. Property should be accounted for, implications in the financial statement, and debt covenant. Question number 2, having accounting issues of the Hallam property, financial statement, and debt component. So something about performance measurement with this question. Number 2, in accordance with IFRS 15, discuss whether revenue arising from sales contract should be recognized at stage of completion basis. This A and B part exclusively for accounting issues. C part. Explain ethical issues which may arise from managing director and accountant for each of the scenario. Professional marks will be rewarded for 2C for the quality of discussion. That's the C part exclusively for the C part, that's about ethics and the professional marks. Sir, is this professional marks related to question 2 or it's about ethics, handling ethics? Do you remember that? Question 2 professional marks is about handling the ethical issue. That means 7 marks plus 2 marks means drafting of ethical issue plus material of ethical issue. That's called 9 marks. The accounting issue here, I must mention here, the equation is that 20 marks is equal to ethics draft 2 marks plus knowledge 7 marks plus accounting issue 11 marks. That is the equation. So you have to handle that situation accordingly. Are you getting the point? How to spend the time accordingly, all the things. Candidates, can you please reply me? Are you with me? I strongly suggest all of you that I hope that today's session is also valuable for you. The things how to handle it. Today we will discuss the SBR question 2, inshallah. Tomorrow we will discuss the group accounts matters. Day after tomorrow, for half of the session group accounts, rest of the matter, something performance measurement, and so on accordingly. Inshallah. Candidates, I personally suggest that you have to re-energize yourself and take a 5 minutes short break. 5 minutes short break. Take a break. 5 minutes. Thank you. Okay, start once again. Already all set. Read the question. The following is an extract from the statement of financial position of Fiskerton, a public limited entity, 30th September exchange. Okay, these are the details. Non-current asset, current asset, and finance side, that's equity, total 10, 20.5151 and 70. And the non-current liabilities, that's 50,000. Current liability, 1,20,815. The bank loan has covenant. The bank loan has covenant attached, whereby it will become immediately repayable should the gearing ratio, that is long-term debts to equity, that is long-term debts to equity, this is equity, of Fiskerton exceed 50%. Fiskerton has a negative cash balance 30 September exchange. Okay. So first of all, we have to identify what is, if we are going to read that particular question, that must have to identify that what is the gearing ratio. Now gearing ratio, that is 50,000 debts divided by equity, 100 plus 21.151, 70.253, that is 49.7. So it's just about to reach. So number one issue, that's covenant. Number two, Hallam property included within the non-current asset of Fiskerton is a property in Hallam which has been leased to Edingley under 40 years. So non-current asset, a property which has been leased to. That's our property, we have leased out to. The property was acquired $20 million, was October 7th, and was immediately leased to Edingley. So the Hallam acquired a property, and immediately once it, the 20 years ago, $20 million on 1st January 7, when they acquired the property, they have immediately lease out, rent out. The asset was expected to have a useful life 40 years at the date of acquisition and have a minimal residual value. Fiskerton has classified the building as an investment property and has adopted a fair value model. This is the point. Yes, this is the point. The property was initially revalued 22 million, 31st March exit. An interim financial statement indicated that gearing was 51% prior to revaluation. Managing director was made aware of this breach contract, so instructed that property should be revalued. And the property is now carried at 28 million, which was determined by the sale of similar size property 30th September exchange. This property was located in much more prosperous area and built with a high grade of material. An independent professional valuer has been estimated the value no more than 22 million. So the managing director has argued that fair value should be referred to an active market and refusing the adjust of financial statement, even though he knows it is contrary to international accounting standards. So what you people say is that with that particular case, what are the relevant matters that's identified? Do remember that you have to stick with the requirement. The requirement A, that is absolute about accounting. It's not about ethics. So number one, how the Hallam property should be accounted for, the first thing. And what the implication in the financial statement, number two. and debt covenant of the Fickerson. Three things. That's important. That's the point. That's the point. Whatever the ethical matters, that something deliberately knows, and all these things, the issue of valuation of the property, that's IFRS 13. And that's property, it's about I-16 or investment property. All these aspects, it's about accounting. And the impacts of this accounting, if something was wrong, and that's impact on the debt covenant, that is the part of A that should be revised. But any ethical issue that we have to control our emotions, because ethics matter must be part of the C. Must be at C part. That's important. Now come on. Number 2, sales contract. That is something IFRS 15. Fickerson has entered into sale contract for the construction of asset. Sale contract for construction of asset with a customer, whereby customer pays initial deposit. And the deposit is refundable only if Fickerson fails to complete the construction asset. The remainder of the payable is delivery of the asset. It's payable delivery of the asset. If customer defaults on contract prior to completion, Fickerson has a right to retain deposit. A managing director believes that completion of asset is performed over time, revenue should be recognized accordingly. And he has persuaded accountant to include deposit and percentage of remaining balance for construction work in the revenue to pay. So again, this is about the question of accounting. According to IFRS, discuss whether revenue from sale contract recognized on stage of completion means 1 point or over the period. 1 point or over the period. That is the point. So IFRS 15 recommendation is that there are 3 situations that need to consider. And the principle is about, that is, we have to consider either 1 point or over the period. Over the period. Over the period, if any of one condition meets out of 3, simultaneously receive by the customer and consume, and 2 more conditions, like developing an asset and providing benefit to the customer. Number 3, developing an asset and there is no use for the seller. All these things. Okay, what the reference of IFRS 15, I'm not discussing right now very detail. Okay. C part, explain ethical issue may arise managing director and accountant. The very important point here, ethical issues having 2 different points. Managing director and accountant. The action points related to accountant, not the managing director. But ethical case will develop with managing director. Ethical case will develop with managing director and then conclude with the accountant aspects. That's the key point. That is the key point. First of all, very important. You asked me the question. If this type of the question, the very important thing you have to consider here, first of all, you have to cover up all accounting issues first. You have to cover up all accounting issues here. Cover up. So part A and B cover the accounting issues. Make a heading, accounting issues. Part A, Hallam property. Accounting issue, part B, IFRS 15. Then C part, ethical. But the very important point, before entering anything in details, you have to work out to plan your answer accordingly. You remember we discussed the very important point of the plan yesterday. The plan about number one, time management, and number two, marks management. The number one, time management, number two, marks management. That's important. Time management, very straight. If I'm going to attempt the 7 marks, for example, part A, 7 marks. Part A, 7 marks is equal to 7 multiplied by 1.8, almost 12 minutes. Marks management, what to write before attack according to the marks. So think about it. First of all, you have to think what to write. Brain exercise. Next 1 month, I have provided you the roadmap for the question number 2. Before attempting the question, before exam simulation, before attacking, you have to plan first what to write. Make a key points. Develop the key points in your brain or with a piece of paper or a scratch card with the CB format. So plan is very much important. Here, the accounting issues. There are 2 accounting issues, Hallam property and service contract. Ethics, EI, ethical issues, 7 marks, plus performance measurement, 2 marks, 9 marks. So you have to very much stick with the marks management. How much we have to write to get the marks. The very important thing, if this type of the question, make heading for accounting implications. Make heading. All things here mentioned. For planning 4 minutes, execution 8 minutes. You have to practice the thing in this manner. So are you really interested, or you must have to reply me whatever I suggest to you, that will you obey that to perform that? That 20, you have to spend your 21 hours, take out the time of 21 hours and then simulate all past paper question 2 in one go. Are you ready for this? Can you please reply me? So I strongly suggest, don't tell me now, don't tell me. You have immediately now, you have to decide with your calendar. You have to decide, open your calendar, at what 3 days you will spend. For example, coming weekend, 11, 12, 13, or next weekday. Mark the day, that 3 days, 7 hours multiplied by 3, or 4 days, 5 multiplied by 4. Write in your diary, mark. And do remember, don't make this strategy that once I will complete the syllabus area, then I will start the practice question. No. You have to practice the question and complete the syllabus area simultaneously. Simultaneously, that's the key point. That is the key point. So candidates, the important point is that lock your dates, lock your diary, lock your calendar, spare your time, and Work out with this direction. That's important. And you have to work out, and your result will move in this manner, zigzag, up, down, but keep moving. That's important. Now, marks management. Number one, the very important thing, discussion, the key ethical principle application to the scenario later on. But the very important point, the first thing is that the correct accounting treatment of the lease, that is about 3 marks. The question is that, is this, we report that particular property as investment property. Because here we are as a lessor. If we hand over asset to someone for the major useful life, so we have to distinguish either the finance lease or the operating lease. Correct accounting treatment of the lease as lessor. As lessor. Means finance or operating. If this is about, and this is about 3 marks. The very important point. So we have to, if this is a finance lease, then this property must not have to recognize in our books. We have to de-recognize the property and recognize the lease receivable and make a schedule for the rental incomes. Oh, sorry, installment incomes or rental income, so-called. Over the period of time, over the period of time, we will receive the installments and then recognize the interest income accordingly. That is the accounting treatment. And you have to work out this. Classified investment property should have to this. And also incorporating the point. There are 3 requirements with part A. What 3 requirements? Number 1, Hallam property, how should accounted for? That is the first thing, 1 mark. That should be accounted for as the lessor and the finance lease lessor, where investment property, the property should be, or the investment property should be de-recognized and the lease receivable should be recognized. Number 1. What are the implications with the financial statement? That is about the numbers. That is rectification of error. And then debt covenant. So these 3 things. How property should account for, number 1. Financial statement extract by correction of error. That is what you need to talk yourself. That's what to do. And then covenant. The gearing ratios. After adjustment, what will be the gearing ratio? The gearing ratio will increase from 49.8% to 54.1. And moreover, this covenant breached and your negative cash balance, that's compromise. That's compromise as a going concern. breach the covenant, negative cash balance, the going concern. So the financial statement must be made with the breakup basis. Should be breakup basis. What I personally think, that is answer is over here, but the model answer more explained with this point. For 3 marks, that's enough. That's enough and it's enough. But that is all in deep. That it is likely that non-current and non-current liability should be reclassified to current and recorded as realizable value. That is breakup basis. Fickerson should be able to renegotiate it with the bank. The uncertainties, the ability to continue trade should be disclosed. But this is not necessary. That is enough. Because the marks limited here. Now, the next point, sale contract IFRS 15. Can you please reply me? Are you people with me? Sale contract. Once again, time management. Once again, the time management. How much the time, plan. Not necessary to put the things in a writing manner. Develop in your mind. Marks management. What to write. First of all, we have to put the knowledge. And case. Performance satisfied over time or point of time. And then conclude with the recognition of the revenue. That is the point. So this is what about the IFRS 15. According to IFRS 15, at inception, you have to determine how you will recognize the revenue at one point or over the period of time. And here, Fickerson only has a right during production of asset over initial deposit. There is no enforceable right to remaining balance at construction take place. Therefore, not able to receive payment from the performance date. So first thing is that they are not able to receive 100% payment. And they have to repay the deposit if the construction is not according to the mark. Fail the company of the company. Means two things important. Not able to get the 100% money before the performance of the contract. Number two, the deposit can also be refundable. So that things reflect this is the single performance obligations. Otherwise, you can refer the complete knowledge of the IFRS 15 you can put here. But this is not the time for the discussion. So out of this is 4 marks, the limited marks. You have to squeeze your answer, limited. Then 1 mark, how to recognize the revenue. Revenue should not be recognized at stage of completion, but deferred and recognized at point in time. That is on delivery to the asset to the customer. That is the. This is 1 mark. Previously, the 3 marks, that is about what will happen with respect to the knowledge and the case. But by single performance obligation, what is about the case? 1 mark case. Once they will deliver, then we will recognize the revenue. The final point, how to handle the ethics. The final point, how to handle the ethics. Once again, the time management. Once again, the marks management. 7 plus 9, 2 marks. I suggest 9 marks. Plan, execute. What are the things? These are the things. Number 1, application. Application of the following decision. Number 1, classification of property as investment property. Revaluation and manipulation of debt. Ethical implication and resolution. Do remember, here ethics is about part A. It's ethics not connected with part B. Do you agree that point? Can you please reply me? Do you agree? Ethics only connected with part A, not with part B. Now, we have to start here. And the professional marks too. Okay, ethical issues. Number 1, first of all, the very important thing. Here class, the very important. Read the requirement. Explain any ethical issue which may arise from managing director and the accountant from each of the scenarios. So you have to develop the ethical case with respect to managing director and accountant with both point of view. Come on. Number 1, either accountant or finance director. This is what about the common paragraph. Kick start. Here about the action point as well. Number 1, this one. Standard paragraph. Just start with this. Financial statement important to stakeholder. Assume financial statement to faithfully represent the performance and position company to make the adequate investment decision. An accountant finance and accountant should comply with the fundamental ethics of the principle set out there. And all these things link the above 2 points. The following the code of ethics, it is more likely to faithful representation of the companies. It's all standard wording. Number 1, the accountant should be mindful threats of fundamental principle. In doing so, accountant should consider facts, ethical issue involved, and fundamental principle, and all these things. First, you have to split your description with according to the requirement. Number 1, accountant. Number 2, managing director. Clear? 2 headings. What are the ethical case of the accountant? Accountant have ethical duty of professional competence and act with due care and attention. This may be genuine mistake, but even would not be expected from professional qualified accountant. What is the ethical case of accountant? They must be professional. Here the case that the accountant must be professional competent. If something wrong happened, non-deliberate, so there is still issue of the ethics that's they are not professionally competent. Number 2, managing director appears to happy to manipulate financial statement. Number 1, threat of self-interest. Why self-interest? Because not to cross that covenant. Why self-interest? For job security. So initially you have to develop ethical case. The managing director affecting to the self-interest and threats, that affect to the integrity and the professional behaviors. That's compromising the principles. So develop the case, number one. After that, and also the matter of intimidation. For example, the sales contract. Here they refer the sales contract as well, because the major issue is about part one. But part two, sales contract, there are two different things. One point of time or over the period. Director says that must have to work out over the period. I'm taking my words back. Here, examiner mentioned to ethics for both scenario, for A and B as well. Here, finance director wants to recognize some of the revenue now over the period, but actually that must have to recognize at one point of time. And pressurizing, that's intimidation threats. Finally, what should be the action point? Do reply me, this action point, actually, if you are going to write the answer of action point, this action point from whom point of view? Accountant or finance director? Do reply me. If you don't reply me, I will not move forward. Yes, accountant. And same standard paragraph. The standard paragraph. This is what about the standard paragraph. Standard paragraph. That the accountant must not influence by managing director. And the financial statement should be transparent and free from biasness. Instead, the managing director should remind of their ethical responsibility. Accountant may need to consider professional advice should the managing director refer to correct the financial statement. Like this is also the action point or the action point we discussed above. This one. This one, action points like this. Very simple. Standard verdicts. So ethics case plus action 2 marks for the professional, then main body of the ACC ethics and the threads 7 marks, that's 9, total 9 marks. That means if you lay out your ethics in this logical manner, means number one, starting paragraph, then develop the ethical case. Develop the ethical case. How to develop? Threats. Number one, threats. Number two, compromising ethical principles. These need to connect with the accounting issues. And then the action point is, if any. This is the complete package of the ethical case to drive. Then you will be able to get the main context marks and the professional marks as well. So can you please reply how to cover professional marks? Can you please reply me? Now, you people are able. What do you think? Are you people able to get to understand that how to get the ethics case of the professional marks? Can you please reply, all of you? Thank you very much.